Today, cryptocurrencies rally after last week's wild swings. Ukraine urges crypto exchanges to freeze Russian wallets. And Russians could turn to crypto as the nation's banks are cut off from global financial markets. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto markets gained about 3% by noon Eastern. The ongoing conflict between Russia and Ukraine remains top of mind for investors. Russia now faces a historic onslaught of financial and economic sanctions in response to their invasion of Ukraine. The ruble is tanking, Russia's stock market abruptly closed, and civilians are lining up at ATMs. This is all having ripple effects on crypto prices. Bitcoin surged back above $40,000 after gaining more than 5% since yesterday. Ether and Ripple's XRP both gained about 1.5% in the last 24 hours. For more context on all that's happening in the crypto market, here's our own Tanea McKeel.
The crypto market really seeing a big jump today amid a decline in broader equities, following these new sanctions imposed on the Russian central bank. Though we have seen some of the indexes just touching positive territory a few times. The biggest thing to take note of is the role that cryptocurrencies are playing in the current conflict between Russia and Ukraine and the potential that they have to play in future military conflicts. This is a very young asset class, and its proponents have talked a lot over the last 13 years about the importance of having a non-sovereign, borderless, censorship-resistant asset to transact in. For many people in the West who have never lived through a literal war and, could not fathom that, it's been difficult to grasp as a concept. So we're seeing since the invasion by Russia into Ukraine, which began on Thursday, there's been a real surge to the highest levels in months of crypto transactions made in both the Russian and Ukrainian currencies on local centralized exchanges, and that's according to data from Keiko. There's chatter about how cryptocurrency can help Russia if it gets to a place where it does need to try to circumvent sanctions, but there seems to be more proof of help on the other side. We have seen reporting, from our colleague Mackenzie Sigalos about the millions of dollars of donations in crypto that have been sent to the Ukrainian government and the NGOs helping on the ground. That's really demonstrating that Bitcoin is, as they say, an agnostic technology. $38,000, that's the number to watch. That's one of the biggest accumulation phases for Bitcoin. More people have bought Bitcoin at $38,000 than any other level above or below. So it's really a key level in that it could be both support on the way down, but also resistance on the way up. A very emotional level for a lot of holders.
Okay, here are some of the headlines you should also know about. First, as Tanea mentioned, Ukrainians are turning to crypto to fund the country's military. On Saturday, the country's vice prime minister tweeted out wallet addresses and asked for donations in Bitcoin, Ether, and Tether. Since then, around $13 million worth of crypto donations have poured in, according to Elliptic. Ukraine's Ministry of Digital Transformation said the funds would be used to, quote, destroy as many Russian soldiers as possible. Next, Ukrainian officials also asked crypto exchanges to freeze accounts linked to Russians. One Ukrainian NFT exchange, D-Market, did cut all ties with Russia and Belarus, but other companies aren't following suit. Binance told CNBC, quote, we are not going to unilaterally freeze millions of innocent users' accounts, and highlighted crypto's goal of providing financial freedom. Kraken CEO Jesse Powell said his exchange couldn't ban Russian users from the platform without a legal requirement to do so. Okay, as part of those historic sanctions we mentioned earlier, the US, EU, and UK agreed to cut off some of Russia's biggest banks from SWIFT, an important global messaging system. Since the invasion of Ukraine began last week, Russia has become increasingly isolated from the global financial community. That's leading many to wonder whether Russians may turn to crypto as the value of the ruble plummets. Our own Kate Rooney takes a look.
It's not as easy as it might sound for the Russian government to get around sanctions using crypto. Liquidity is one big problem. It's hard to find places to buy large amounts of Bitcoin or any cryptocurrency. These markets are what they call thinly traded compared to the rest of global foreign exchange. The Bitcoin-ruble pair, for example, maxes out at $200,000 per trade, even on the world's largest exchanges.
There is this narrative out there that, hey, if you shut off SWIFT, you shut off Russia, they'll just use Bitcoin or cryptocurrencies to move money. But Russia needs to move $50 billion a day. And just by comparison, the ruble to Bitcoin market is about $200,000 of liquidity at any given moment. So that is, completely unlikely that they're going to be able to use crypto to move money and put a dent in that $50 billion. Secondly, even if they were to move money, the endpoints to get money off, crypto are highly regulated.
Ripple pulled some of this data for us. If you look at the Bitcoin US dollar pair, that max transaction is much higher. It's about $3.5 million. Sounds like a big number, but in the context of the billions of dollars in foreign exchange that Russia would otherwise be doing, I'm told Bitcoin really cannot compensate for Russia being locked out of SWIFT. Exchanges would be the main place to get liquidity, but sanctions likely take away that option at this point.
So what a crypto exchange does is they take in, for example, US dollars like Coinbase does. A bank is helping them facilitate that, taking in those deposits. And then once it's on the system, the exchange, it's traded for all sorts of different cryptocurrencies. But the reverse is true as well. When you want to trade out of a crypto into US dollars, that again leverages a bank.
There are black market options and lesser known cryptocurrencies, but those are even less liquid. Exchanges are right now on high alert for sanctioned Russian accounts, and global exchanges are also subject to the same anti-money laundering rules as banks. No matter where a crypto transaction happens, it's also traceable. Data firm Chainalysis is among those tracking some of those moves. They say they haven't seen a large amount of crypto being moved in or out of Russia just yet. I'm told demand for Bitcoin and stablecoins is picking up on exchanges in Russia. That could increase with currency devaluation, but the country has historically cracked down on the industry, so it's unlikely that crypto will be adopted as a new payment system within Russia.
We talked to our Russian correspondents at CoinDesk, and the situation on the ground is pretty much getting cash out, of the ATMs that are not working or running out of cash. A lot of these folks don't have savings, so the access to crypto hasn't been as fluid as one would expect. So you probably think that these are larger individuals of sorts, but we then saw the tweet from Russia's officials saying that, they want to definitely block access to the wallets in coordination with the exchanges from Russians and ordinary citizens.
Before we go, we also want to update you on a new report about Bitcoin's environmental impact. The study found that since China banned crypto mining last year, fewer and fewer mining hubs around the world are using cleaner energy. The research published by Joule found a 17% reduction in clean energy use since 2020. That means miners moved off of China's clean hydropower and to non-renewable energy sources in other countries. The study also found that Bitcoin mining produces as much pollution as the entire country of Greece. That's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.